Fantastic. So we're close to the end of the day, so I know we need a little bit of energy. I'm not sure if digital identity would be what I would use to energize you, but actually I find it an exciting topic and glad to be able to connect it to a lot of what was discussed earlier during the day. Okay. Okay. Better? Okay. Okay. Thanks. So I want to make three main points today. First of all, it's about how do we use digital ID to accelerate financial inclusion? That's really the main point of this conference. What is digital ID and what is it? How is it a tool? Secondly, I want to talk a little bit more about collaboration and harmonization. The last panel just closed on that point. I think there's a long way to go, particularly in Africa, around the opportunity of a free trade area to create ways for banks to share. But it's not only across borders, but even within borders. There's a lot of scope that we have for creating more efficiencies by streamlining the definitions that we use, particularly around eKYC. And finally, I want to talk about a concept we call good ID. How do you use good ID in a way that's trusted and builds value by increasing utilization? Why digital identity? First of all, digital identity is a digital means of verifying. How about this microphone? This seems to work. Okay, great. Yeah. So digital identity, we know that around the world about 1.1 billion people don't have any way of identifying themselves. They don't have birth certificates or birth registrations. There's some countries in Africa where only 2% of people get birth certificates. And around 1.7 billion people around the world lack access to credit. It's an often quoted statistic. There's a lot of correlation between these two. If you don't have any way of verifying who you are, then the process of customer identification and verification, or KYC, becomes quite difficult and onerous. And that hits women disproportionately heavily and hits low-income consumers particularly heavily. That number around who doesn't have ID has been going down. India, what I'll talk about in a second, launched a global nationwide population scale program called Aadhaar, which helped drive that number down from about it was historically closer to the 2 billion down to right now it's slightly less than 1 billion. What we're also concerned with is, like all technologies, so there's always unintended consequences. Technologies are always dual use. You intend them to have a certain impact, but over time you may be concerned that actually the privacy issues that emerge from the use of the technology, that you don't want to actually enable the wrong uses. So there's a set of norms and values that we've developed that we collectively call good ID, essentially to ensure that identification as it's developed is used to empower people. So it's really a human-centered or people-centered model, which we also heard a little bit earlier today. Now going back to the Aadhaar model. Come back to that point. So the Aadhaar experience, now it's about 1.2 billion, but initially, by about March 2017, they enrolled about 1.1 billion people into this ID system, about 85% of the population. Now this is a country that's roughly equivalent to the continent of Africa in terms of population. Authentication, so the monthly average of people authenticating themselves, which is essentially transactions over the system to authenticate, hit about 139 million a month. And eKYC at that point was about 44 people opened accounts. I looked yesterday, because they track these numbers daily. Yesterday there was 3.4 million people that did authentication over Aadhaar. So the numbers have gone up very significantly. Over Aadhaar, which was sort of a base system, they developed a set of APIs, one of which was a unified payments interface. So all of the other service providers can use. The number one user of the Aadhaar API or unified payment interface is actually Google Pay. That has now crossed over per month 1 billion transactions. So it's a very large number of transactions that are starting to happen. And over time, this trend has just been going very, very tremendously actually has surpassed, UPI has started to surpass card-based transactions. So this month, FATF, the Financial Action Task Force, issued its guidance around digital ID and the financial sector. So essentially they said, digital ID systems have the potential to improve the reliability, security, privacy, and convenience, and efficiency of identifying individuals in the financial sector to the benefit of customers and regulated entities. We know that KYC is very costly and expensive, and it's a burden for people, and it prevents them from participating. But as you do these ID systems, both for the purposes of the financial sector, but also more broadly, you need to be concerned about the policy choices. Centralized versus decentralized. Are there trust frameworks that define levels of assurance, or high quality, high risk versus lower risk transactions? Not everything needs to be at the highest level of assurance. You know, a Facebook participation isn't a high risk activity, whereas a financial transaction might be. What is the role of the private sector? In Sweden, the national ID essentially started as a consortium of banks. Many others are sort of government driven. We also are concerned with, when we're thinking about ID, the fact that when we're participating over the internet, effectively our data is aggregated in a way that profiles us. So for advertising or other purposes, there is a question about whether all of those digital trails are also ID. And we think they should also be treated with the same norms around privacy and security and user centricity. We should have choices when we are profiled over the internet. There's also processes. As governments do these, is there transparency? Are they engaging stakeholders, banks, telcos, civil society, and what are the technology choices? So open source, we've supported something called MOSIP, the Modular Open Source ID Platform, the authentication technology, whether it's mobile first or not. So there's a number of technology choices that governments also need to make. And as we've sort of thought this through over the last few years, we also see, because of every bank doing KYC a little bit differently, the data fields are inconsistent. What data goes for the bank onboards a customer and it wants to verify with a national ID system the identity of that person. The beauty of the Aadhaar system that I just talked about is those initial data fields, which are quite limited in the case of Aadhaar, are taken as trusted data. There's no need to re-verify that. You do the onboarding process, you pick up those data fields automatically, there's no further verification needed, according to regulation. However, in other countries, we've seen the number of data fields is different, and how much data goes from the ID system, the government, back to the bank is different. The biometrics or other authentication technologies are different. And when all of these things are different, then you create an inability to share data across and to create service providers or to enable service providers to cover multiple markets. So we believe it also prevents the value when, for example, a customer may be applying to multiple places, or there's transactions that cross from one country to another. More harmonization around these data fields and processes would add value and reduce costs further. So when we talk about good ID, we're talking about user control, privacy and security, transparency, inclusion, and accountability. We believe that leads to citizen buy-in and gets trust, which then increases utilization, which ultimately creates economic value. A lot of the economic value from ID systems become really viable when you get close to population scale. When you get close to population scale, for example, you can deduplicate beneficiaries of social security payments or ghost workers or other issues where you have multiple identities claiming a benefit. You can't do that when only half of the population is on board because the other half doesn't trust the system. So that's why it's so important to design these things for inclusion, i.e., somebody in an earlier panel talked about PIN codes not being useful for older people and therefore a biometric. There's many little things like that that you need to do to think about inclusion. The distance it takes to get to enrollment. Fingerprints also for some type of manual labor don't really work because they wear off. What are the alternatives and how are you communicating with your communities in order to design for inclusion. When we think about good ID, again, a little bit more trust building and practice in data collection and use, in vendor contracts and tenders. What are the feedback loops? Are you using open source or not? Accountability, what are the legal frameworks? What is the recourse for somebody whose data may not be correct or has not been included in the system? In terms of tech design and policy features, how are you setting for privacy? Are things encrypted, at rest or in transit? In inclusion, we talked a little bit about that. Well, what are the limits to mandatory use? So sometimes there's a little bit of overreach, and in fact, in the India case, the Supreme Court said things had gotten too far, and then some more legislation is needed to make some of the additional use cases viable. And then finally, in terms of security, how rigorous is the cybersecurity and defense system, the safeguards from breaches? Because any one breach can then erode trust that you might have built up over years. So those are our concerns and why we talk about good ID. When we get to good ID, we think businesses that design that way really produce more transparent, responsive systems that better satisfy customers. Again, trust is at the heart of it. We find that putting ID systems in place can rapidly include people in the financial sector if that system is trusted and widely used by citizens. And then we can build on that by creating other efficiencies across banks and across countries. Thanks. I'm looking forward to the panel and talking a little bit about something we're really passionate about.
Thank you, Volkan. And thank you for being here. I know that being, as Magdi was saying, being in the last session on any event is an exercise of persistence by the audience, so thank you so much for being here. I really think that the digital identity topic is very topical, if I may say. As Volkan was saying, this is very high in the policy discussions, in the agenda of many stakeholders, ranging from digital platform companies to international organizations, to foundations, and obviously to governments. So this is something that we are going to see throughout the presentation. What is important to me, from the formal perspective, let me say that we're going to have, we had this initial presentation from Magdi, so thank you very much for the presentation. Just to set a bit the scene about several topics, we are definitely going to be talking about the different models that we see in digital identity, and which are the overarching principles in these different models, which are the characteristics that define them, and many other things about the different roles, responsibilities, new players, new model, etc., that we see in this space. Okay, so let me just please introduce my fellow panelists. In the far left, we have Feroz Sanaulla, Senior Strategic Director, Advisor Roland Berger. Right in his right, we have Tunde Fafunwa. He's a lead advisor, Digital Center for Excellence, Identity, Trade, and Economy at the United Nations Economic Commission for Africa. And then we have Magdi, Amin, investment partner at investment firm Omidyar Network, that has already made the presentation. So first of all, thank you for the presentation. Very insightful. And what comes to my mind first of all is that when we talk about digital identity, we are talking about the digital economy, and not only the digital economy, we are talking about the digital world as a whole. Typically, we are already in the transformation, in the journey to this digital world, and this digital world and this journey has been shaped by two main driving forces. First of all, is about the technology evolution has been massive over the last year. And this second element should be the people's behavior evolution, and in any single dimension. I mean, as individuals, how they relate with others, with family, with friends, as customers, how they relate with companies that are providing products and services to them, and as citizens, and how they relate with governments. So this is not purely about the financial inclusion itself. This is a big part of that, but this is much broader than the pure financial inclusion. No? What is important, I mean, also is that throughout the process we have missed, throughout this journey we have missed a number of steps. And I was reading a week ago a paper from Citi. It was about the age of consent. and the federated ID. And basically, they were making an analogy that is relevant to me. They were talking about making a comparison between the construction of the pyramids and the digital identity or the digital world, this journey. And they were saying, okay, when they were building the pyramids, they were starting with the base, with the fundamentals, with the building blocks, and they were building the rest of the thing. Typically, the building blocks are the ones that are supporting all the weight of the pyramid. If you go to our digital world evolution and this journey that I was mentioning before, the thing, it seems that we have started in the middle of the pyramid. We have missed some of the steps, some of the building blocks. And definitely one of those steps is the digital identity. So in terms of the definition of digital identity, basically we are talking about electronically collected and stored data from individuals and companies, and this data ranges from the more traditional, typical ID information to a more, let's say, and this is pretty much static in a way, to a more, let's say, dynamic set of information coming from unstructured data sources. So this definitely makes a wide difference, right? So this is a very important, and this transition is what we are trying to look at in this panel. So this new approach to the digitalization and the digitality is bringing in this new ecosystem new players, new models, so I was saying new roles, new responsibilities. So if you allow me, I will, and the way we're going to be doing this, we have just commented this before, is trying to make it a bit more conversational. I think this is the last session of the day. So we're going to be directing questions. They're going to be jumping into the question as long as they have something to say in that. But I will be directing the first question to Tunde, if you allow me. We have seen many different models. Actually, Magdi was presenting, for example, was making some reference to the Aadhaar model in India. Some of those models are more top-down, like, for example, the Aadhaar coming from the government and going down, and some others are like bottom-up, build some more private solutions and coming up. But to me, it is very relevant to understand what is your take, what do you view on the role of the government in this sort of models. So when we're talking about creating these nationwide identity solutions, what is the role that you think that the government should have? And if they have a role and this is a relevant role, how you envisage the collaboration between the government and the private sector?
Okay, great. Thanks for that introduction to the topic and really for Magdi's broad overview. Certainly from the United Nations Economic Commission for Africa, when we look at the problem, what's the problem we're trying to solve? For us, the problem we're trying to solve is that there are more than 500 million Africans without any form of foundational identity. So you have 500 million individuals who are unknown. Obviously, if you don't have identity and you don't have a form of identifying yourself, you're not participating in the financial market, but obviously you're not participating in formal economic activities. You're not able to be identified for social subsidies, social welfare, and other government programs, etc. So the problem of identity, certainly from a UN perspective, is also one of a right, a human right. To be identified. And the United Nations recently launched a legal identity initiative and basically states that identity is a right. So that's the problem that we're trying to solve. As you mentioned, there are different models. The Aadhaar model was an identity first. It was driven by the government. Magdi also showed that Sweden used a banking model where the banking ID was used. But obviously in a situation where you have a significant portion of the population without any form of identity to start with, where you have birth registration, which is typically your foundational identity document, only about 33% or so of Africans or African children born today get a birth certificate. So that is not available as an identity document. So identifying people is the most critical. Magdi also mentioned certain principles which the Economic Commission for Africa supports, the good identity principles, which are focused on inclusion, on security, on privacy, on governance, but also, of course, include interoperability and vendor neutrality and standards. So for us, those are the principles. Now, to get to your question of what are the models to get there, we've seen a variety of models, as mentioned, but we really don't see any model that doesn't involve some sort of collaboration between the government and the private sector, and quite honestly, in many cases, it has to include civil society. Why? These are very huge initiatives, and as governments change, administrations change, policies change, very important that there are continuous anchors, and in many cases, both the private sector and civil society, which can really represent people's rights, are very important in that. So the models that we see that are, we think are viable going forward really involve this collaboration. And for us, the key question is, how do you build that? How do you build a multi-stakeholder process to get at these issues, many of which are entrenched? To be honest, from a government side, typically you have a homeland security or internal affairs or a group that's responsible for civil registration. You have the security services. Of course, you have the regulators on the banking and financial side. And there has to be, in our view, a way to work together for us to set up forums where those discussions happen, so you build coalitions to go forward. We think those are the kind of models that are really going to emerge to be successful. Right now, there's a lot of discussion. There's a lot of interest. Almost all countries are talking about digitalization and the digital economy and digital ID. But the actual number of significant programs on digital ID or initiatives nationwide of the 55 countries are really, you could almost fit on one hand. So the models are really emerging, but we think that it's the multi-stakeholder, public-private initiatives that are really going to provide the momentum.
Okay, perfect. There's one thing, because in the previous panel that they were talking specifically about interoperability, they were talking about us, they were talking about the next panel. So this is one of the things that I think is relevant, and there's a number of multilateral organizations that are putting in practice some programs in order to help in that interoperability. Not thinking interoperability within one specific country, thinking about that interaction that you were saying between governments and private public sector, but thinking about interoperability across countries. How you see that happening, if that is happening? I mean, we see programs such as ID for D, the World Economic Forum ID, Good ID, the ID 2020. So there's a number of those. Do you think this is working? Do you think this is something that may add a lot or not to the discussion?
Yes, I do think that those different efforts add a lot. I think they're required. I think there are a lot of other efforts, some which were mentioned by the colleagues on the previous panel. In SADC, in West Africa, in WAMU, there are new payment platforms that are coming up. There are attempts by, as you mentioned, Smart Africa, ID for Africa, to build these coalitions. And we think that's really important. This is a problem that requires multiple efforts. I think Commissioner Abu Zayed also mentioned in her opening remarks the digital transformation strategy. So we're also very much part of that in terms of defining what are the pillars, how do we create a framework that then can be adopted by the African Union and can act as a blueprint going forward to build a multi-stakeholder process, which is really necessary. So yeah, all these efforts are critical because it's a big problem. One of the things that I think is maybe worth mentioning is that if you look at the European Union, for example, they are a legal construct. So a decision made by the European Commission is binding on the members. In the African Union and on the African continent, that's not correct. It's just, or it's not the case. It's just recommendatory, right? Countries actually have to ratify their participation individually across the 55. So there is no other way except building these coalitions. And it's a bit of a messy process. But I think the efforts that are happening are important and they're significant.
Let me just add to that. we supported a number of these initiatives with grants, and for me, I sort of started our work on Africa on digital ID, and the first thing we did was to support Tunde's organization, UNECA, because they're working with the African Union, and together with the African Union, we think there is a need for a horizontal platform that covers all of the continent, especially given the free trade area. And now with Egypt's leadership of the AU, the upcoming summit can cement some of these things. I mean, but interoperability, it's just like telephones. I mean, if I need to authenticate somebody, if I'm a Senegalese, let's say, and I want to do a transaction in Kenya, then my ID system needs to tell that person on the other side how to authenticate me. It's almost like, what's my area country code? So if we can all agree, what's the mechanism? So I include some digits in addition to the random digits that constitute my ID. If there are some digits to say, I authenticate biometrically, and this is the server that you need to check against, or however way we ultimately agree, then we're going to be able to all communicate ID authentication language across borders. It's not that difficult. What's difficult is everybody agreeing, right? So there's that way to do it. There's also ways where you might set up a gateway, you might set up assurance frameworks so that we all trust each other's ID, which is more the European model. However way we approach this, it requires is exactly what Tunde said. It's political will. And with the free trade area, there's a huge opportunity to leverage that to create a digital common market. And I really appreciated the steps Egypt has taken, including getting a Privacy Act together in this country, data protection and privacy. Those steps are what's required to then create leadership across Africa around this market.
Okay, perfect. Let me change a bit, and this is another question that has been posed in some other panel. Probably this is a word that we are talking about digital economy or the digital world is a kind of something that always appears. There will never be the case again in which one single company, government, or institution will be able to develop something on their own. So if you allow me, Feroz, I would like to address this question to you. And I would like to have your take on how you see how this is evolving within the private sector. I mean, in terms of partnerships, with among the different sectors, telcos with banks or banks with retailers or whatever. Which are the movements that you are seeing in that specific space? At the end, you have like the public side with the government in one side, and then you have the private side. Definitely, this is something we have been talking about. That this is something that should be like cross-sectorial in the approach. You see, this is happening. You see this movement.
Yeah. I mean, from my perspective, I think if you look at the broader data set. There's a baseline of data which the governments collect, whether it's birth data or your home address or whatever. That's just kind of like the basic data. But the problem is that the private sector knows a lot more about you. By the time you update your address with the government, Facebook already knows you've moved. By the time you want to change your gender, you've already Googled, right? So many private sector entities will know more about you much earlier than you would be able to volunteer that information into the government. So the future is collaborative. It has to be collaborative, because if we don't collaborate, the private sector will then take its own path and race ahead towards building their own quote-unquote digital identity and leave the governments behind. And I think that's a significant danger. So I think if we look at it from a federated point of view, I think it is going to be a combination. And I think it'll be exactly what you said. It'll be probably all your social media presence, to your retail experiences, to your ability to search. All of that data will ultimately come through. The question that we have to ask ourselves is, what is the incentive that any of these private companies have to share that data? And what is the governance model that we're going to use to be able to make sure that privacy is met and all of the data that is pulled in is used for the right purpose? And here there is a debate, right? Whether it should be done from the perspective of you sharing the information to the degree that it's needed for that transaction, or whether it's more generalized in terms of its use and the trust is on the other party to be able to use that data from the perspective of what they want to use it for and not use the other data that they have been given. That's still up in the air at this stage. And I think when we were discussing, we debated that quite a bit to figure out where the future is going to be. I think that is still unmoderated, and we need to kind of figure that out.
Okay. Yes. Yes. And there's a lot of debate on that. We've been going through that in the lands definitely. We were thinking that there was a number of topics. If we open up pretty openly, some of the topics we're going to be here like a couple of hours. So hopefully we should be closing some of those. There's one question, Magdi, when you were making the presentation that you were talking about Adahar, I'm thinking about this Adahar model as a kind of a reference when you talk about digital ID models. And I was thinking about what has been probably the best practices you could extract from the Adahar. And I was thinking, for example, adoption of 85% of population. That's amazing. That's probably one of the big hits of Adahar. But in the other side, which could be the kind of learnings that we put on the table? So if we think about different models, what should be the learnings that we could extract and put on that additional models?
Sure, that's a great question. So I think when we look at the Adahar experience, a number of lessons have emerged that we also see some countries in Africa and elsewhere either repeating some of the problems or correcting and building on them. I don't know why I'm microphone challenged today.
Not even one.
By the way, the conference arrangements have been really good, much appreciated. The dinner as well and the music last night, so thank the organizers. And the microphones, it's just, it's all just microphones. No big deal. So we think that in countries pursue this, they should start with having an open discussion, right? Having a very open discussion of what are the purpose? Why are we collecting this information? How is this going to be used and how is this not going to be used? What are the benefits that you get from sharing this information? And how can you protect yourself if you think the information is wrong, et cetera? Then that did not happen. And how they just moved forward and developed it. It was a great idea, but it still needed to have that open dialogue. Secondly, data protection has to be in place. Because all of a sudden, you are going to have a lot more information on citizens. You're going to do a mass enrollment, okay? Because the birth certificates would take decades to get everybody with a birth certificate as populations move through the system. But you're going to do a mass enrollment with thousands of people out enrolling, including public and private sector, however they decide to do the enrollment. All of a sudden, the government or whoever is issuing ID has a lot more power in the form of that data that, in a way, has to mean that at the same time, you have to give people some rights around the use of that. So it has to be a bit of an equation, a bit of a balance. So say data protection laws should be in place before the ID system, ideally. If not, put them in place as you develop the ID system, because they're going to be needed for a whole number of other use cases. So thirdly, with data protection, with open consultation with civil society, then a lot of transparency. I think the procurements and everything that happened were good, and there were some great, what I liked about Adahar is also embedding a lot of privacy by design. It isn't usually when an authentication happens, it is really, is this person the same person who enrolled? It isn't asking them for 100 data points. It's asking, is this person the person who enrolled? Yes or no? And the Adahar system pings back, yes. And then, if it's in a KYC process, it's auto-populating the relevant fields. It's not amassing all this social and personal data, which, look, as far as data goes, I love personalization of services. But I don't want somebody influencing my voter choices. I don't want somebody guessing, which I saw recently, ads serving me up as if I have diabetes. I don't have diabetes. Yeah, I am concerned about exercise and I may Google a few things about exercise, but it doesn't mean that I have diabetes, right? So I don't like some of those inferences, and I want to have a little bit more control over some of those things, which get covered in digital identity. And for banking purposes, you really can do a minimal, efficient process, only the data that is required to make a decision. And in many cases, it can be done with yes or no answers. Is this person of this age? Does this person have, in trying to identify the beneficiaries, or does this person have a home, does this person have a vehicle, et cetera, rather than the make and the model and what size and what, you don't need all that.
Yep.
Right? A data minimal approach, and Aadhaar was very good about that, and the architecture was brilliant in many ways, with some of the governance considerations which ended up happening as a result of a Supreme Court judgment. They could have been done in advance. I would have preferred that, of course.
Okay, thank you.
Can I add something
Sure.
to that? I think you're absolutely right. I think the world has skewed towards a fairly, strange place where you are seeing those kind of behaviors from private companies, and I think that's something that needs to be probably reined in somehow through some frameworks. And I wish technology had not come in as a disruptor but had evolved over time. But technology as a disruptor creates these models. The pendulum swings one way, and then you have to bring that pendulum back. And I think we are reaching a point where things are happening which are beyond our control, and I think they need to be brought back. Let me talk a little bit about the Aadhaar system, and I can talk about it because I'm Indian, and I'll give you a couple of data points. My mother's 84 years old. She lives in Sacramento in California. She taught for many years and has a pension in India. To this day, she has to every year show her physical presence to the State Bank of India so that she can get paid her pension, which is about $400 a month, right? And Aadhaar has still not solved the problem of figuring out a way to digitize her identity to a degree where she can sit at her home in Sacramento, and she's 84, arthritis, and she can't move, to be able to authenticate that she's still alive so she can get paid, right? So at some point in time, I told my mother, why don't you just sit at home and forget about the $400? It's not a big deal. Let's just let it go. And that's that. So I think there's a bit of work to be done to be able to make that happen. Second data point is, and I sympathize with the panel here, I don't have a birth certificate myself. I mean, I was born in India, but I have no idea where my birth certificate is. I've never seen one. And many, many, many millions of people live like me. How did I now manage to move from India to Saudi Arabia to the United States? Well, through something called an affidavit, which was basically a promise from my mother and father that I was their son, right? The only fact I know is that I was born, because I'm here, but beyond that, I have this piece of paper. So there are many people like us out there, and so as we move towards more of a digital constraint and a digital manifestation of our identities, I think it's important that we cover all the population. And I think probably, how many people in Africa have that situation?
Yep, 500 million.
Yeah.
If I just make a quick point on the models, thanks to the colleagues for the comments. I'm going to suggest that Aadhaar may be similar as a model and as a limit to what we saw and have seen with M-Pesa in Kenya. So I was involved in an effort to look at best practices with the World Bank in 2012. And at that point, there was a lot of excitement, as there continues to be, about M-Pesa and what it had done and how much it was covered the population and used for government payments, and the fact that it seemed like a good model, or certainly one particular model that would rapidly populate over the continent. Well, M-Pesa is 10 years old now, right? And it's not really been replicated anywhere close to that extent anywhere else, although Zimbabwe in a special situation with EcoCash. So I'm going to suggest that there are sometimes technological innovations that come in, quite honestly, before the broader regulatory establishment and players really understand what the impact of that is going to be. And I think M-Pesa was very much that. In many other countries, the regulators, in some cases, with the support of the bank or the central bank, decided, oh no, mobile companies should not be able to do that. They're not financial institutions, etc. And that was just the decision that was made. So it was not, when M-Pesa we never saw the replication of that. I think Aadhaar, in many cases, is very much like that. It was something that came before people realized all the various complexities of it. And so while I think that there are many critical lessons, a lot to be learned, a lot of approaches there on the data minimization, on the stack process are very helpful, I'm not, from what we've seen, at least over, I'd say, the past 6 months of working very closely with quite a number of African countries, we don't really see the ability to do that kind of rapid enrollment that's done without the consultation, as Magdi mentioned. We see that, multiple government agencies are very interested in digital ID, on the data that's collected, on setting the standards, and no one entity is just going to be able to quickly go out there and just enroll people. So I think a lot to be learned, but I doubt we'll see that kind of replication. Yeah. I think it exists in a particular bubble in a period of time. A lot to be learned, but replication, doubtful.
But Tunde, technology came to fill a gap. It was the neglected millions.
Yes.
Banks didn't care about them. The bank said, I'm not going to ever make money out of these millions of people in the bottom of the pyramid.
Exactly.
Hey, there was a gap to be filled. And M-Pesa came and bang, it filled that gap. And suddenly, the central bank can't wake up, and suddenly the banks can't wake up and say, hey, hold on a minute, that was my territory. Well, that was not your territory to begin with. It was somebody else's, or it was nobody's, right? So, yeah.
Yeah, well said. For allusions, now that you were mentioning the banks, I think this is one of the questions that I had for the last part of the, because I cannot see the clock, this blank screen, so I assume that we have like 10 minutes or so. So I would like to pose a couple of questions on this. One is definitely related to the role that you see for financial institutions within this digital identity ecosystem. So we are a subset of the private sector, but definitely when we think about which are the overarching principles of digital identity and thinking about trust, transparency, and privacy, typically banks should be in a very good position to address and to play a relevant role in here, right? We were having a conversation before. We were saying that typically in some countries, banks have been leaving behind a big proportion of the population. So that perception of trust of the population in banks probably does not exist. So typically we need to start from scratch like any other player. So this is a completely different situation. So understanding and making the acknowledge that this is going to be different from one jurisdiction to another, what is the role and the role that you see from financial institutions in this new ecosystem, and number one, and number two, how well equipped you see banks in order to play that role in the ecosystem? We're among bankers.
Good question. I think a few thoughts to get us started, and it would also be great if we have a couple of questions from the audience to continue the dialogue. But I would say that banks are trusted. Financial inclusion is typically low in Africa, so a lot of folks don't yet have bank accounts, but there should be a strong interest in these digital ID systems because it makes the marginal consumer who might not be bankable in a profit sense viable, because of the cost of bringing them on board is too high to make them viable. If these systems are designed in such a way to lower the cost of onboarding and verification and reduce the AML, CFT costs tremendously, and also allow transactions across borders, there should be a strong interest in banks to see that these things are designed well and that are used well, right? So I would say, first of all, be a part of the design equation and design conversation. Secondly, I don't see why not to have bank coalitions. I would say if I were looking at Pan-African solution, I think Tunde talked about assurance frameworks. As Europe has high level of assurance, or there are also different tiers of assurance. I don't see why not try to have a coalition of banks across Africa to form a collective around digital identity. There already is a little bit of work around KYC that Afrexim Bank is doing, but there could be more done if we were to create an African level digital ID for certain transactions. I think that might be something the banks could lead on.
A couple of comments. Has been mentioned, the Continental Free Trade Area, which was probably clearly the fastest signed and ratified major African Union agreement. So it was less than 18 months ago when it was fully proposed and signed by countries, but then it was already ratified in June this year, so it's now in effect. It is being implemented by the African Union and partners in terms of reducing both the trade and non-trade barriers. The potential effects are, of course, in the hundreds of billions. It'll make the African continent the largest single trading bloc. So, you know, are there opportunities for banks, particularly if we now have ID where citizens are fully identified? I think the opportunity is huge. But I think there will be other players. I think the history of major technology innovation and the opening up of competition across the telecom sector showed that sort of many of the boats, or all boats, sort of rose with the tides. There were some players, existing players, that were successful and some weren't, and there's going to be a lot of new players. I think it's going to be a very different world 5 years, 10 years from now, where digitalization changes the nature of the way people look at services and want services and consume services that are very different from today.
Yeah. I think from my side, the customer acquisition cost is high for a lot of banks. They have a large infrastructure to pay for. The central banks require very large amounts of capital adequacy. So I think in some ways we need to kind of think outside the box and think of a rich bank and a poor bank. And a poor bank is a bank that banks millions, mostly focuses on payments, and we call them fintechs generally, right? These are the companies that have come in. They don't fit in the constraints of having huge amounts of capital adequacy because they don't need it. They don't have huge amounts of deposits. Most of the people who are at the bottom 80% of the layer are moving money. They're not storing money. So I think we need to rethink how banking works, because if we expect a large bank to be able to include hundreds of millions of customers with the kind of costs that they have to suffer, it's just not going to happen, because it just doesn't make financial sense to these banks. So I think we need to start thinking about these two-tier systems, because the needs of the bottom of the pyramid are very different than people like us and the wealthier people who require stability. And for that, we need some sort of a higher levels of adequacy.
Okay. Yes, and even thinking about, broadly speaking, about digital identity, the role of the banks going a bit beyond, which is digital finance, digital economy, and playing a role of custodians of the data of the customers and being able to manage consent between the customers and the different providers that they may have. So I see there may be a number of roles that banks probably are well equipped, and typically those processes that for the bank has been always a cost, such as all the KYC processes, could be seen at this point as a kind of revenue stream to extent, and this is something that definitely we could explore. There's another question I'd like to make because of time that we have. Probably then we can try to go to the audience if they have any question. But one of the things when we were making talking about the definition of digital identity, one of the things is that we were transitioning from one more static definition to a one more dynamic definition. Part of that is because we're starting to use that unstructured data sources that we didn't have in the past, social networks, mobile telephone patterns, or payment transactions, or whatever. So having that in mind, what is the possibilities that this is bringing into the table? What are the options? What are the benefits that bringing this information to the digital ID concept may bring in order to target customers, in order to, we were talking about credit scoring built on this specific information from customers which we don't have any record on any financial activity. So how do you see these unstructured data sources coming as integral part of the digital identity, and which are the benefits that using this could pose for?
Look, I'll give you a couple of examples. So, well said. I mean, look, digital identity itself is just an identity. It's static in nature, but actually as you create history of your own digital imprinting into the system, you're creating a fluidity. So there's a lot of fluidity in your own self as you kind of build data and you build your history online. So what happens is that even if you have had 0 transactions and you have never borrowed money, the telco knows where you've gone every day of the week. So if you're going from point A to point B, and point B is your office and point A is your home, and you have collected that data, that's valuable data because you know that the person is employed, and you can use that data to underwrite that person at a much better rate of return than you would for somebody who you know nothing about. So I think location-based data becomes important, how they move, your IP address becomes important, and all these things become very important if you collect them, but only for the purpose of a transaction, which is underwriting or lending. But it doesn't solve the problem of identity. Identity is somewhat static, and from that perspective, what the layers you add around it, the social layers, etc., are used for a purpose. And in the banking case, it's used for a purpose of lending. Now, let's be also a little bit honest to ourselves. A lot of times, the people you're trying to include are financially illiterate. They're not so literate. So the danger of pulling these people into the system is also the danger of allowing them credit to become debtors for things they can never pay back. So we have to also have a social good in the back of our mind to balance it out so that we don't put people into the crutches of becoming debtors for the rest of their lives. So it goes both ways. I don't know how you guys deal with it, Omidyar.
I just want to, you're probably going to guess that I'll be talking about privacy, but, but I just want to say that we do some for-profit investing, early stage technology as well. Just about everything, I think so far, just about everything you need to do online using data, you can do so in a privacy enhancing way.
Absolutely.
We've been working on an investment that, for example, I don't know if the Egyptian equivalent of a Spotify, but in many countries, and maybe it's Spotify, is Spotify guesses what kind of music you like. They've got me nailed. They know me exactly, okay? But, and you know, come up with bands and music that I just love, but I've never heard of because they know my profile. You can do all of that personalization on device. It does not need to be centralized data. Because once that data is centralized, it becomes a target for hacks and for breaches that have now become liabilities. So you don't want to have data all of a sudden become a massive liability on your balance sheet because of the way that it is. Unfortunately, hackers are very quick to advance. You know, there's a cat and mouse game with cybersecurity and hackers, right? Even cyber defense, we found that you can do cyber defense. Typically, you have to reveal some of your data in order to get your data protected. You can do cyber defense in an entirely encrypted, hashed way by also encrypting the dark web, right? Which is where the data goes before it gets sold, right? So everything that can be done in a privacy enhancing way. So I would not sort of give you a direct answer to say that, you know, you should not amass that data, because we know that data can be used, the patterns of people's social and other behaviors in a way can create some inferences. Yep. But as long as you think through the implications of how that and where that data is stored, and do so data minimally and protect it on device and other methods, then I think, yeah, it can, you know, it's a trade-off worth taking.
Okay, perfect. Thank you very much. We have run out of time. I don't know if we have time for one question from the audience.
Somebody back there?
If that's the case, we have one question there.
And one over there.
Okay. Yeah. This one. No.
Still not. Oh, there
Yes.
we go. My question has to do with the assumption that people living in poverty don't save and don't have the financial literacy to borrow. People living in poverty have very complex financial lives, as Portfolios of the Poor has shown. Savings groups, self-help groups, Mshwari all show that there's high demand for savings. It's just that banks and fintechs don't have the right products. They don't understand the financial flows of people living in poverty. So my question is, what can be done to better develop products that help use the financial flows that are there and help enhance them and make products available that are appropriate to the lives of people living in poverty?
Any of you, but please choose. Sorry? Okay, yes.
Hi, I'm Bart van Lieberger with FMO. I heard a lot about, and thanks for the interesting panel discussions. I heard a lot about the role of the private sector and governments also in the development of digital identities. Could you talk a little bit about, do you see a role as well for development banks in getting this off the ground?
Okay. So you're going to start with the second question, and you can either you could take the first one. You sure? Wish.
Okay, I'll just take a quick response. So we at ECA were involved in a process in South Africa where a key initiative was done around digital. This was in a slightly different area of business process outsourcing, but it was a multi-stakeholder process that involved not just the government trying to set targets, etc., but the private sector who was involved, as well as civil society. And it was very instructive because the kind of information that flowed gets to the question that the gentleman, our colleague, asked, which is there tends to be information gaps. And it is, in our view, the multi-stakeholder process that reveals things that sometimes may seem not obvious to some of the other players. So for us, very important, because a lot of times we've heard this several times at the ECA that, you know, you're policymakers, you're building things, but nobody's talking to us. So are we really talking to people who we want to benefit? So very important to have that process there. As far as the development banks, I think they're critical. They may be one of the linchpins that sort of link, you know, the public sector and public good with the private sector and the need for profit and economic efficiency, and you know, development banks are sitting right in that central and very important role.
Some of these systems can be designed in a way to be revenue generating by transaction and through public-private partnerships, but many of them are not. Many of them are public entities that have a infrastructure benefit, so the private sector benefits from it. So to that end, governments may be borrowing to set up these systems along, you know, and some of the World Bank, African Development Bank, and others. I think FMO might have a practice, but I know certainly many development banks have a practice in supporting countries with digital identity. As long as the government, you know, has made its choices around the policy frameworks and whether it wants to do a private-led or a public-led system, then certainly there's a big role for development banks. And just to the point, I mean, a great point, the poor have a financial life that's rich. We just need to make it cost effective to serve them, and that's one of the main reasons we're interested in digital identity, just to empower people, especially people who are right now excluded from the system.
Yeah.
So it's all about that.
No, I agree with you, and I think for talking about the products, look, we do a lot of talking, but we do a very, very, very bad job of listening, and I think we need to start listening a little bit more. And listening happens at grassroots level. It doesn't happen at our conferences, etc. You really have to be in the fabric of society and figure out what they need. Unfortunately, it may not be the most profitable segment in society, but it provides social good. And I think we need to coerce and also push our governments to be able to fund certain programs so that the private sector can actually have a little bit of a cushion to be able to go and listen. And once you listen, you come up with products.
Okay, thank you. Thank you. We are over time, so thank you again to the audience for your presence here. And join me, please. Thank you, the panelists for the presence here today. Thank you. Thank you.